Welcome to the deep dive. Today, we're plunging into something, well, really fascinating, a major strategic shift happening with a crypto project called AIFEX. Think about a project hitting a point where its original setup, maybe innovative at the time, starts to kind of limit its potential, especially for, decentralization. That's the story with AIFEX. They're going through such a big change, people are calling it a reboot. And our listener wants to get under the hood here, but not just technically. They want the strategist's view, someone who sees the whole game plan. So our mission today, to break down that strategic vision, pinpoint the strengths, and really clarify the potential this opens up, whether you're just curious or already deep in the space. Okay, let's unpack this.
Yeah, and what's really compelling, I think, is that IFEX isn't just, tweaking a few things here and there. They're basically architecting a whole new foundation from the ground up. It's a very deliberate move, a repositioning for a stronger, more resilient future. And we're going to get into exactly why that matters for you and what kind of opportunities might be presenting themselves.
Okay, so let's start with this reboot idea. It sounds, well, pretty dramatic. What does it actually mean for the everyday user, or maybe someone thinking about investing? And what are the core strategic pillars driving this whole thing?
It is dramatic, yeah, but in a very calculated, strategic way. IFEX is doing a complete architectural overhaul. They're moving from what was essentially a semi-centralized app. It had bits of central control mixed with blockchain stuff, to a full, completely on-chain protocol. This isn't just an update. It's like re-engineering the whole engine for true decentralization. And it really hinges on three critical strategic axes. First up, you've got migration and liquidity. So AFX is moving its main trading action over to PancakeSwap. For anyone not familiar, that's a major decentralized exchange, a DX, on the Binance Smart Chain. And there, they're setting up a brand new AFX USDT trading pair.
Okay, PancakeSwap, AFX USDT. Got it.
Right. But the really significant part isn't just where they're trading, it's how. They're putting up 3 million USDT in initial liquidity. That's a serious amount. And, this is critical, they're burning the LP tokens, the liquidity provider tokens.
Burning the LP tokens. Why is that so important?
Because burning them basically locks that initial liquidity into the pool permanently. It removes those tokens from circulation forever. It means the project team can't just rug pull their liquidity out suddenly. It's a huge signal of commitment and transparency written right onto the blockchain for anyone to verify.
Oh.
Reduces risk dramatically.
Right. Okay. That initial funding plus the burn, those are definitely strong signals. Builds trust. So with that base of liquidity and trust, how are they changing the actual use, the demand for the AFX token itself? What's the second pillar?
Good question. The second pillar is what I'd call a really shrewd tokenomics refinement. They're moving away from the old system where you might have staked USDT, the stablecoin, to earn rewards. Now it's going to be AFX-only staking.
So you have to hold and stake their own token.
Exactly. And strategically, that's brilliant. It forces you to acquire and hold AFX if you want to participate in staking and earn rewards. This creates direct organic demand for the AFX token itself. It weaves the token right into the core function of the ecosystem. Its value becomes tied not just to trading, but to its actual utility within the platform.
That makes a lot of sense. Ties utility straight to the token, driving demand internally. Okay, what's the third piece then, especially around user experience and decentralization?
The third axis really doubles down on enhanced user experience and decentralization. This means bringing in Wallet Connect functionality and a whole new integrated DApp, a decentralized application. Now, what this means for you, the user, is pretty significant. Your stake principal, your rewards, they'll automatically go directly to your own personal crypto wallet that you connect.
Oh, interesting. So not held within the app itself anymore.
Precisely. And crucially, all the swapping, the trading, happens directly via PancakeSwap. It completely moves away from any kind of CEX-like experience, like a centralized exchange within the app. So no more funds sitting in some internal app wallet. You control your assets directly on the blockchain in your own wallet. Stepping back, look at the big picture. This isn't just tech stuff. It's a fundamental move towards genuine decentralization and what we call community-owned liquidity. It puts way more control and transparency right into your hands as a user. That really does set IFEX apart strategically.
Okay, shifting an entire ecosystem like that, getting rid of those centralized bits, I mean, that sounds like a massive job. Our sources talk about something called a migration effect. Sounds like it could cause some temporary bumps. So if you're watching the charts or looking at your wallet, what does this migration effect actually look like, and why does it happen?
Yeah, that's a really crucial point, and something everyone involved needs to kind of get their head around. The migration effect is totally expected. It's a short-term side effect when you make such a huge, complex change. Think of it like, I don't know, completely rebuilding and rerouting a major highway interchange. There are going to be temporary detours, lane closures, maybe some confusing signs for a bit while everyone adjusts.
Okay, so in crypto terms, what does that look like?
In crypto terms, you might see temporary price differences for AFX between, say, your wallet app and a trading platform. That's common. You'll see liquidity moving from the old pools to the new one. And yeah, there could be brief periods where trading is interrupted or maybe slippage is higher while things recalibrate to the new on-chain setup.
So if I see one price for AFX in my tracking app and a different price on PancakeSwap, that's not necessarily a red flag. It's like we're living in two worlds for a bit.
Exactly. You nailed it. That's what we sometimes call the two worlds price phenomenon during these transitions. On one side, the price in your wallet app or maybe some portfolio tracker might look off. That's likely because it's still pulling old data, maybe from an old, now unused trading pair like a AFX USDAI or something. That data just isn't relevant anymore. On the other side, you've got the actual DEX, like PancakeSwap, or data sites like DEX Screener. These will show the real, live, on-chain price for the new active pair, and you need to be absolutely sure you're looking at the right one. The AFX USDT pair specifically at the contract address 0x915B45B52V62 A73 FICO V839019E7DD0 0C Tantre FIC62 on BSC, the Binance Smart Chain.
Okay, that contract address is key then, 0 by 91, ending in 4572. That's the source of truth.
That specific address is the unique identifier for the new smart contract on the blockchain. It is the single source of truth for the market price. It's just really important to remember this difference is temporary, it's expected. It doesn't mean the project itself has issues. Knowing where to find that real, verifiable data is your compass through this short period.
That clarity on finding the real price is super valuable, especially during a confusing time like a migration. Okay, so clearly these changes are way more than just shuffling tech around. This feels like a much deeper strategic play by AFX. From your viewpoint as a strategist, what's the actual game AFX is trying to change here? What's the long-term vision that makes them different?
Yeah, the strategic shift is pretty profound, actually. This whole move fundamentally pivots AFX towards true community-owned liquidity. And it strategically positions AFX itself as the main engine driving demand. That's the core game change. Community-owned liquidity isn't just jargon. It means the project aims to not rely on external market makers or big centralized players to provide the trading liquidity, which always brings its own set of risks and, frankly, conflicts of interest sometimes. Instead, liquidity is ideally provided by the community itself, incentivized through the tokenomics. It creates a much more robust, self-reliant ecosystem.
Okay, community-owned liquidity, and how does that tie into the bigger vision?
Well, the long-term vision they're building really rests on a few key advantages this move creates. First, it's about deep LP plus clear burn plus real volume. Simple equation, powerful outcome. If this new PancakeSwap pool gets deep, has lots of liquidity, and the LP burn is transparent, you can literally go check it on Bscan, the Blockchain Explorer, yourself, and real trading volume starts showing up. That builds massive confidence. But more than that, it allows for proper price discovery. The market can find the real value of AFX based on actual supply and demand, not artificial forces. That's huge for long-term stability.
Right, verifiable actions leading to real market dynamics. What about the user philosophy side?
That's the second piece, empowerment and transparency. This whole move fully on-chain, direct wallet connections, the DApp, it all puts you, the user, much more in control. You get way more transparency over your assets, your transactions, you're interacting directly with the blockchain, not through some company's intermediary layer. That's pure DeFi ethos right there.
And our sources mentioned a golden window. What's the strategic take on that?
Right, the golden window for strategic entry. Look, sources might highlight opportunity, and this period could represent that for people who understand the risks in the strategy. But as a strategist, you always have to remember any window involves uncertainty. The real insight here isn't about timing the market perfectly. It's recognizing that if AFFEX executes this successfully deep LP, verified burn, working to lap, it fundamentally strengthens their whole position. It sets them up for sustainable, resilient growth on a truly decentralized foundation. That's different from projects that just talk decentralization. The difference is in the on-chain proof.
Yeah, that difference between talk and actual verifiable execution is critical in crypto. Okay, this sounds powerful, points to a real edge they're trying to build, but let's make it practical. For someone listening, maybe wanting to engage, what are the concrete, actionable steps they can take right now? How can they confirm what's happening? Maybe start participating, but do it smartly, managing the risk. What does this mean for someone wanting to get involved today?
Okay, absolutely. For you, the listener, thinking strategically, there's a clear tactical playbook. Let's break it down. First, a quick checklist for your immediate due diligence, things you can do right now. 1. Confirm the trading pair address. Always use the right one. For this new AFX USDT pair on BSC, it's 0x915B45DF1B5ED873B6CC2 B390-197D DCCD94572. Bookmark it. Check it every time. Don't trust random links. This makes sure you're in the real pool.
Okay, step 1. Verify that address, 0x91-4572. Got it.
2. Assess the liquidity. Go look on PancakeSwap or Dex Screener. How deep is the pool? What's the buy-sell pressure look like? How many trades are happening per hour? This gives you a live pulse check on market activity and stability.
Check the pool depth and activity. Makes sense.
3. Verify the LP status. Don't just take their word for it. Go on to Bscan, the blockchain explorer, and actually look for the transaction that burned or locked the LP tokens for this specific pair. Transparency means you can check the proof yourself.
Verify the burn on-chain. Trust but verify.
4. Do a test swap. Before you make any big moves, swap a tiny amount, like literally a few dollars worth. See what the slippage is like. Check the gas fees. Slippage is that difference between the price you expect and the price you get. Gas fees are transaction costs. A tiny test swap gets you comfortable.
Small test swap first. Good practical tip.
And 5, prepare for gas and slippage. Always have a little bit of BNB, that's the network token for Binance Smart Chain, in your wallet to pay for those gas fees. And in your wallet settings for the swap, set an appropriate slippage tolerance. That's the max price change you'll accept. Especially during volatile times like a migration, you need to account for potential price swings during your transaction.
Right. Have BNB for gas, set slippage. Excellent practical steps. Puts control right in your hands. Okay, beyond those initial checks, what about a sort of action plan for people already holding AFX or maybe thinking of entering now? How should they approach it strategically?
Yeah, let's frame an action plan, thinking strategically. First, if you hold AFX already, patience is probably your best friend right now. Let the new PancakeSwap pool stabilize, let the data feeds catch up. The prices in your wallet should eventually sync with the real on-chain price. This isn't the time for knee-jerk reactions based on potentially old data.
Okay, existing holders, patience, let it stabilize.
Second, if you're looking to add to your position, think about dollar cost averaging, DCA, that's buying a fixed amount regularly, or maybe laddering in buying small amounts at different price points, especially around what we call confirmation points, like maybe when the LP hits a certain depth you're comfortable with, or when you see sustained real trading volume pickup, or when the price difference between sources gets really small. It just reduces the risk of going all in at the wrong moment.
DCA or laddering in based on confirmations. Smart. Don't just jump in.
Third, regarding stake. The new AFX-only staking sounds promising, right?
Yeah.
But wait until the full specific details are out. What's the exact contract? What are the lockup periods? Understand all the terms before you commit a large amount. Maybe start with the small portion once it's live and you've reviewed everything. Due diligence applies to new staking contracts too.
Wait for staking details, start small. Got it.
And finally, TP risk, take profit and risk management. Always have a plan for taking profits. Maybe plan to sell in layers, small percentages, especially if the price starts moving up quickly during this discovery phase. Lock in some gains, manage your risk. An exit strategy is just as vital as an entry one. Following these checks and strategies helps you navigate this proactively, with confidence, instead of just, reacting emotionally to the market noise.
That's a really solid, comprehensive playbook. Okay, looking beyond these immediate actions, though, how can we, as observers or potential investors, judge if this whole migration is actually succeeding long-term? What are the key things to watch, the KPIs, that tell us if this big strategic pivot is actually working out, and what are the different ways this could play out?
Right, this is where that strategic mindset really pays off, looking past the daily noise to the actual metrics that signal success or failure. There are definitely clear key performance indicators, or KPIs, you should keep an eye on. First, liquidity and LP status. Keep tracking the total value locked, TVL, or liquidity in that new AFX USDT pool, and crucially, watch that percentage of LP tokens that are confirmed, burned, or locked. The higher that percentage, the better it shows commitment and reduces risk.
Track the liquidity and the confirmed LP burn percentage.
Second, Trading volume and user adoption. Look at the daily trading volume. Is it healthy? Is it growing? Is it consistent or just spiky? Also, look at the number of net buyers versus sellers. This signals genuine market interest and activity.
Real volume, real user adoption. Gotcha.
Third, DApp Wallet Connect usage. Can you see evidence on the blockchain of people actually using the new DApp? Are rewards actually being transferred to user wallets via Wallet Connect as promised? This verifies the new decentralized system is working and being used.
Check if the DApp is actually being used for transactions.
Right. And fourth, price consistency. Monitor how quickly that price difference we talked about between apps and the actual on-chain price starts to shrink. As things settle, those numbers should get much closer, showing the market is maturing and data sources are synced.
Look for the price gap to close. Okay, those are clear KPIs. So with all these moving parts, how might this unfold? What are the potential scenarios we should be sort of mentally prepared for?
Yeah, having a scenario plan is always smart. Helps manage expectations and adapt your strategy. I see roughly three possibilities. First, the bull case. This is where everything goes smoothly or relatively smoothly. Execution is fast and effective. You see deep liquidity quickly, the LP burn is clear and verifiable early on, the DApp works flawlessly, and users adopt it rapidly. The result? Price and volume recover steadily, stabilize, and show strong upward momentum. Confidence builds, new investment is attracted. That's the ideal outcome.
Okay, bull case. Smooth execution, strong recovery.
Then the base case. This is probably more realistic for complex transitions. There might be some expected delays, maybe a few technical hiccups here and there. That's pretty normal. But importantly, the data eventually syncs up. Issues get resolved transparently, and normal trading resumes within a reasonable time frame. The result here would likely be higher volatility at first, maybe some frustrating moments, but ultimately, a clearer positive trend emerges as the new system proves itself.
Base case. Some bumps, but it gets there, trend becomes positive.
And finally, the bear case. This is the less desirable outcome. You might see persistent problems. Maybe the liquidity stays thin, causing high slippage on trades. Maybe communication from the team is slow or unclear about fixing issues. Technical problems linger. The result here could be renewed selling pressure, eroding confidence. In this scenario, strategically, you'd want to reduce your risk, maybe take some chips off the table, hold more cash, and reevaluate your position carefully. Having these KPIs and scenarios in mind gives you a framework. It lets you think critically, assess AFEX's progress using actual data, and adjust your own strategy smartly rather than getting caught up in fear or hype.
Wow, what an incredibly thorough and strategically sharp deep dive into this AFEX transformation. It's really clear this isn't just some minor tech update. It's a really bold, calculated bet on a future that's more decentralized, more robust, and genuinely puts more power in the community's hands. And our sources seem to agree, yeah, the short term might be choppy with this migration effect, but if the team delivers on those core promises, the deep burn liquidity, the transparent on-chain operation, the working DApp, then the midterm structure for AFX should come out undeniably stronger and more resilient than it was before this big move.
Exactly. That's the strategic intent. This whole demanding process is about laying a foundation for sustainable long-term growth. It's about empowering the community and cementing AFX's role not just as a tradable token, but as a core utility-driven asset in a truly on-chain world. So as you think about everything we've discussed today, maybe mull this over. What does it really mean fundamentally for a project to achieve community-owned liquidity? What kind of impact could that level of real decentralization combined with verifiable on-chain transparency have on long-term stability and investor trust? Not just for AFEX, but maybe for the whole DeFi space as it continues to evolve. It's a powerful question, I think, and one that could really shape where crypto goes next.